Hello and welcome to all Two-Plan members to this short presentation on how and why financial advisors should help their clients to maximise the value of their cash. Throughout the presentation we'll also be looking at how you can generate additional regulated business, how you can obtain referrals from professional connections, and how you can also obtain greater regulatory protection on the advice that you provide. Now, the basic principles for managing cash are here. The first two are obvious, and the third one relates to the fact that if you're maximising the rate of interest, you shouldn't keep too much money on instant access. Only retain the amount that you need for the next 12 months, and with the balance, build a portfolio of fixed rate accounts. And the biggest key to cash isn't just about what you can obtain if you do manage your money, it's about what you are given if you don't. The banks and building societies like people to keep their money on instant access because they control the rate of interest that they provide, and this is denoted by the pale blue line across the bottom, which over the last 20 years would have been insignificant, but clearly the banks and building societies would be maximising the value that they obtain. Now, the dark blue line is clearly the FTSE 100 index, and that is used because this is people's general perception of risk. This is the index that the BBC use every day to ram down people's throats to talk to them about the general state of the economy. So consider now those people who don't like risk and those people who don't talk to financial advisors. What those people are doing are resigning themselves to the performance of the pale blue line across the bottom, because we've already stated that the majority of people do not manage their cash. Now, accountants have a lot of these people on their books. Accountants know where every penny of their clients' money is kept, and they know exactly what return they are getting. So throughout this presentation we're going to show why those accountants should be referring clients over to you to maximise the value of their cash. We've added in now RPI and also the average earnings index, so we can see clearly here why we have this perception that cash cannot keep pace with inflation and also keep pace with the growth in average earnings. However, if you maximise the value of cash, we can see clearly that cash can beat inflation and cash can maintain its value over the long term. So clearly, from an accountant's point of view, the question is, do you want to resign your clients to the pale blue line at the bottom, or do you want to give them access to having the opportunity to generate the returns shown by the red line? Clearly, of course, once you get the referral over, you then talk to the client about the virtues of wealth, the virtues of equity-based investments, and how, if money is managed properly, clearly how that risk isn't necessarily something to be afraid of. But the key first and foremost is get the referral. Now, what do you need to know? You need to know how much your client has and how much they need available for the next 12 months. And of course, the balance between cash and investments comes in point 3 there. But if you can't do it quickly, then you can't do it effectively. So now let's just take a quick look at how quickly you can get a solution for your clients. So we have a component here which is white labeled and can be white labeled for Two-Plan. So let's take a generic example. We've got £100,000 on deposit and the client wishes to have access to 25,000. We can use any account type, but for the purpose of this presentation we're looking at personal accounts. We click on the tick and the system builds the portfolio for us and generates the return. Now, the key, as I previously said, is if a client isn't managing their money on £100,000, they could be earning as little as £10 per annum return, whereas you are showing them here that they could be earning very nearly £1,700. And if you can educate your clients on the management of their cash, you build greater trust. Finishing off with the component, your client can then pay a small amount of money for a report, which will give them all of the information that they need to help them go and obtain these returns. Enter a few details, contact number, and away we go. Now, if this is sat on your website, an accountant could be doing this, and every time an accountant produces a report, you get copied in to that request. So the client makes the payment and comes back, and then straight away we have a download here. James has a few handouts and that he can share with you to show you what that report looks like. So that is basically the length of the demonstration for this morning. So I hope you found that interesting. I hope that I've made some points there which make you think about what you're doing for your clients and how you could enhance the quality of the service that you're already providing. So thank you very much for listening. James will now share with you the details and of the engagement with Deposit Sense, and I hope you enjoy the rest of the day, and we look forward to hearing from you.